And we're live this week in Coverager for the week of today is Friday, August 14th, early Friday morning. We're having our coffee. This is the show where we discuss the topics or articles that were in Coverager that were the most popular or gathered the most attention or had the most conversation. As usual, I have my two co-hosts, Shefi and Avi. Good morning.
Good morning. Hello,
Good morning.
everybody.
And so, Shefi, I'll kick it over to you. Week of August 14th, what was hot this week?
My birthday, but aside from that,
25?
more like no. 39.
Wow.
Yeah,
I
know.
wouldn't have guessed that. Congratulations.
Thank you. It feels the same. But yeah, so birthday celebration aside, we had two exclusives this week. Hugo Insurance and PolicyGenius. So I'll start with Hugo Insurance because it's something we've been checking constantly because it's a little bit of a history there. It's a startup from Santa Monica. So far, kind of a small team, so very early stage. They launched a product about last year, around the time of last year, and then for a while there, that product went down and they were not accepting any new customers. So it was nice to check the website and see a landing page, and I was able to get a quote in Chicago, I want to say. Yeah, Illinois, Chicago. It appears like they changed underwriters, but that's not really the main story. The main story is that this is a pay-as-you-go liability insurance product. So targeting I would say, the lower income customer feels a lot like they're playing in the space of just auto insurance, which was a guest on our podcast.
Yeah.
So one to watch. It's not much to share yet, right? This is really early stage, but congratulations on the informal launch. The other, I think, top story was PolicyGenius. We've basically did a tidbit via the email because what we've seen, they've launched an app about 2 or 3 months ago, and part of that app is the ability to create a will. So we've been talking a lot about insurance under the influence. Avi talks a lot about like backdoor selling of insurance. So you want to create usability, and you can't do that around insurance, or you can try and you're going to fail. But if you're taking transactional activities that are close to the insurance space, like creating a will, then you may be able to offer insurance. There's a bit of an issue with what I just said, because at the time when you are creating a will, it typically means you have assets. It also means that you may already have insurance. But the whole idea of creating a mobile app for PolicyGenius and offering more services is it just gives you a sense of their strategy.
I think it's interesting with PolicyGenius because if you look at life insurance, kind of once you sell the product, really there is no usability. You buy it, you forget about it. There is no reason for PolicyGenius to talk to the customer. But they've now kind of put more focus, I would say, around car and home insurance. And when you do that, you have to make sure that every year or every 6 months, if the customer wants to compare again quotes, they come to you. And if you look at Gabby and Jerry in the space, and they have mobile apps, and you need to create that touch point because, again, you don't want to lose the customer. So I think that's part of the reason why they now launched an app. Still have a way to go. I think the app is nice, but I wouldn't say it's the most amazing app that's out there. But good move. The will, I'm not so excited about the will part because really, if you're in the will business and you want to do that, great. But if this is kind of like a lead gen, I wouldn't think so. But as a value-added service, definitely I can see people that just bought life insurance, hey, let's think of a will. So that makes sense, but I don't see it as a way for them to get more leads for life insurance in that matter.
And we need to acknowledge all the others that are having a similar strategy, right? We have Fabric that offers the ability to create a will as a value-added service. So Fabric is Brooklyn-based life insurance startup. I think we mentioned them, that they have an affinity partnership with Guardian Life. There is also Tomorrow, and Tomorrow kind of does the reverse. First you go and here's an app to create a will, and if you want, you can buy life insurance and pet insurance through us, right? So As I said, I said this before, insurtechs are competing with insurtechs, and this is what it looks like. So execution, we will be watching what PolicyGenius will be doing next.
So this could be an area where I think fintech and insurtech, there's going to be potentially a lot of overlap, because woe is the company, the life insurance company that doesn't at least keep up with these other companies that are creating these touch points. Avi, even if they're meaningless, even if they're not necessarily profitable, I think it will differentiate those companies that do create touch points versus those that don't. But I think there's a fintech play here, because this is getting into the financial planning area, where one, it's really complicated. So you got wills, you have life insurance, probably there's issues with trusts. I mean, to me, wills and trusts kind of go together. Now you're talking legal, so there's legal tech as well. This is like a Venn diagram of some complicated areas. And as you guys were sort of describing this, I kept thinking to myself, I wouldn't want to be responsible for having to manage that for my family. So to me, it might be another, kind of a point in the bucket of financial advisors. I think there'll be a necessity for them to help guide through this stuff, but now the tech is here to help do a whole bunch of stuff seamlessly.
Yeah. And to build on that, it's better that tactic than going the route of afterlife planning. So all these leave a message for your loved ones, or let me just give you a place to store your important documents. I mean, these things should be free, and you could do it free. Maybe not with the coolest tool on the block, but better something that's transactional or needed. And as we said, this for somebody like PolicyGenius, this is a piece in the bucket, right? So if they've got A to Z stuff going on, and they're exploring estate planning, which they are in terms of creating content and obviously this app, they're going to tweak it and learn and improve. So it's positive.
Yeah, you wonder what will be their next products, because they'll need to add more. And you talked about fintech, Nick. Like a fintech company could actually say, hey, we know you have assets because we know how much money you have in the bank. Do you have a will? And they could actually segment by customers that are worthwhile, like really going after, versus people that may have debt. I mean, I wish I could give my debt to someone. That'd be great. But that's the the beauty of fintech. And but you wonder what other products PolicyGenius will go after. I think it's interesting. Like if you look at them, versus the Zebra. The Zebra doesn't have an app, of course, because again, you look at the touch points. You wonder if the Zebra is working on something similar, because there is value to have that app and get that notification. Hey, it's time for renewal. Let's compare before you, by mistake, go somewhere else. But the space is getting very interesting. And I mean, PolicyGenius, I've been saying it for a while that they took the hard way, and they, are really pushing forward. But I feel like they're putting now more emphasis on the home and car insurance, which, obviously are more popular in general, because you don't have to wait a specific person to reach age or, event in his life to qualify. So that is going to put a lot of pressure on other companies, and it would be interesting to see how that moves forward.
Yeah, it's interesting after last week's episode where Asaf was talking about the debundling.
Asaf from Hippo, everybody knows.
Asaf from Hippo talked about his views that there's going to be a massive debundling, but I just think the debundling is just a repackaging of bundling. So in his view, he's digging deep, very, very deep, a deep well for homeowners, and kind of bundling a whole bunch into that well. And I just think on the life side, life and fintech were just always sort of married together, and I just think there's going to be a lot of bundling. Like you said, Shefi, the afterlife stuff, a lot of these more simple transactional things that you store, should be free, right? Like that's probably a really good loss leader or lead gen for a lot of these companies. And I think I just don't see any way around it. I think any life company that's sort of listening to this, you really have to up your touch point game. And I think they become very vulnerable unless their end goal is to become a partner with some other fintech company, to be the life entity for someone else. But my preference would be to sort of control that relationship versus being a commodity. But I think there's different ways.
So the decoupling or debundling, I can see that, because what we're trying to do, what modern insurers are trying to do, is target a specific segment, and you're really narrowing. It starts with a niche product, right?
Yeah.
But the conflicting trend, I think, is embedding insurance into a product that's not necessarily insurance. So on one hand, we want to offer pay-as-you-go liability insurance product, and if you want, full coverage, they redirect you to Safe Auto in the case of Hugo Insurance, right? Something very small, very specific for a very particular target audience. On the other hand, and this really depends on the product, what we're seeing is a cybersecurity software being offered with cyber insurance, or auto being sold with auto insurance. So you have to look at it in terms of, PolicyGenius speaking home and auto, is because there's a lot of shopping going around. It really is a matter of the convenience and the confidence. So convenience, how easy it is to actually buy a product, and then the confidence that you're getting a good price in terms of whether you should be bundling or debundling or coupling or whatever it is. But lots of things are happening. It's really hard to generalize. So I think, to Asaf's point, I understand why he was saying that comment, and we see that happening a lot with a lot of insurtechs that are going after a specific segment. But then when I take a step back and I move outside of insurance, how I see how it's not necessarily about bundling insurance products, but it's about bundling insurance with a non-insurance offer.
Yeah.
And Apple, by the way, is going to go big time on bundling. According to reports, they're going to bring the Apple Music, Apple News, Apple TV all together, kind of, because some are performing better than the others. And I always thought that, Progressive talks a lot about it, like how bundling is great, and in America people kind of like the bundle, but it really depends, I guess, on the demographic and the product. So there's a lot to consider. I personally think,
for Progressive, it's about 10%, right? That's the market of Robinsons.
Yeah, but so it depends. But you need to kind of like watch out how they may bundle a service, and it's not necessarily the product. I still believe most people do want to compare products, so that's why I think companies like Gabby, Jerry, PolicyGenius, the Zebra, they're in a good place. But at the end of the day, it's who is able to kind of make it known to that customer that this is the place to get your answers. And it's very hard with insurance because, PolicyGenius is putting ads out there for car and home insurance, and they may get the customer and they would compare, but they have a cheaper insurance currently, so they're not going to win the business. So it's a very challenging business model, but it really depends. And I actually think Asaf, in a way, is bundling with the coverage that he's taking with,
That's what I mean.
In a way, he has his own kind of,
He's bundling in his very slim vertical, which is what he would need to do to sort of extract the most amount of value from that vertical. So
what was the deadliest bundle in history? Do you know what that was?
I know.
What?
Yes.
Yeah.
Coca-Cola and McDonald's?
No, the deadliest bundle, the bundle that killed an industry.
What's that?
Remember the flashlight apps you used to have on the iPhone?
Yes.
So then Apple launched where you could just turn on the light of the camera, so you don't need the flashlight app anymore. So no more flashlight apps.
Oh, okay. Yes.
So they bundled that in. That was the end of the flashlight apps. They were very popular. I remember I used to download and just press it, and I had a flashlight. But now you could just do it on your phone. So yeah, that was a big deal.
Remember when Microsoft bundled Internet Explorer into Windows?
Was it separate?
It was separate, yes. Then they bundled it, and that was the whole genesis of the antitrust lawsuit.
Oh, okay.
You know?
And that's, I think, why still a lot of people use Internet Explorer. They just get it installed with the Windows, and they never, change to Chrome or something else. So that's a smart move. A lot of people don't care. They'll just take whatever is out there.
That's true.
Yeah. Okay. So what?
So
what
this
else,
week
Shefi?
was a lot about the life insurance space.
Yes.
Those were the exciting stories. My favorite cool startup for this week was Lively, which was something that Avi picked. It's a Canadian startup. And what it does is it offers a platform for freelancers. And I know it's really tricky to target freelancers right now, but they're basically helping with invoicing and payments. And once a payment has been made, the startup has the capability to set aside a contribution. And together with Manulife, this will eventually accumulate into a full benefit package. Now, it will take time for that benefit to accumulate, but it reminded me of the startups that are in the consumer-facing roles in which they help people with spare change. And you buy life insurance, and we see that overseas and in the U.S. as well. So I think that is that, but for very small businesses. So the idea is really clever.
The idea is clever. It's getting people to kind of think about two challenging things at once and try to solve for that. So obviously there's many invoicing softwares out there for freelancers. But say, look, whenever you get paid, you could set aside a portion of that go towards your health insurance and dental coverage and all that, pay time off. That's a clever idea. The problem is with freelancers, it's a very unstable segment. Like, you have the really good freelancers that have been freelancing since 1995, where people thought they were crazy. Like, how is it that you don't have a 9-to-5 job? Versus people that are trying to freelance, on the side, trying to get it going. And it's hard to think long-term as a freelancer because you're saying, well, if I won't have much money, I rather have money for my car than for my health insurance. That's how a lot of people think. Like, I rather have money to pay my rent than to have money for my health insurance. So it's always kind of like something you think about later. And you look at Trupo. I mean, you have to mention Trupo, which, it was a mission for them to target freelancers with benefits. And the company morphed over the years. They started off as kind of like a community where you come together and freelancers for freelancers. And if you break your leg, then you'll get money. And then it changed to like traditional benefits, and nothing was special anymore. And then it changed again, and now it's a coming soon page. And this was founded by one of the founders of the Freelancers Union. So she had the network, she had like an audience, but it didn't generate enough interest because obviously it's not working. So far, it's not working. So again, it's like people talk about freelancers, but there's so much that is going into that space. Like, you really say, is this a professional freelancer that has been doing it for years and is doing it successfully, or is it someone that's unstable and I can't talk to them about anything right now? So it's a challenging market. It's an underserved market for sure. Sorry. But it's hard to segment that kind of group.
So we're now starting to see I think it is underserved, and it's now starting to see a lot more activity from startups trying to service them. So Thimble, Next in a way, does that, Vouch as well. And to me, Avi, I think
Cover Wallet, that was the news, going after technology startups.
Yeah. And
Not so much
I think
freelancers,
there's
but
something to that, right? Like I think it almost by necessity requires a technological solution because the premiums are too small and too volatile, and so you can't have a lot of overhead and still continue to serve them. So it does require quite a bit of a digital solution in order to try to solve that, and probably a lot of bundling too.
Yeah, I agree. I mean, if you really want to target freelancers, like first figure out who is, that person that you want to target, and then try to bring as many services as possible to try to
Yeah.
make their lives easier and make it really more affordable. And you know what? I mean, a lot of it, especially now, you look, it's just, devastating how, people lost their jobs, and especially, photographers, no weddings,
Yeah.
contracts, it's just crazy stuff. And I mean, I say good for the startups that are targeting, these individuals. I think it's important, but I wonder if there is maybe a way where you can offer some more stability to a very unstable segment. And if you can figure that out, like I would even say, like, look, like the way with Lively is you have to have 12 months of your premium set aside to qualify. Like, why can't you offer them a different model, like kind of like a pay as you go or something, make it easier for them to obtain that coverage? And you know what, if they fall behind on their payments a little bit, what's the big deal? Foot the bill for them, they'll pay you back. Try to create that kind of connection. I think it's really important, and it goes a long way. Obviously, you take a risk, but it's a very risky demographic to begin with. So you have to keep that in mind.
Did
yeah.
you, Avi? Did you get a chance to listen to my Next Insurance podcast?
I did.
Yeah. So that was interesting, right? So that they did sort of what you just described. So when they brought in their their it wasn't a content director. They basically decided, okay, they were going to have an ad spend. They pulled that back, and they basically then went to their freelancers and paid their freelancers
That was
to
great.
help
That was
create the marketing ads.
you know what, I can tell you, I almost had a tear really when I saw it.
Yeah.
These things, I'm a very emotional guy. I don't know if you know, but it really is nice to see. Like, it's so simple, it's so cliche, but it works because especially in America, like, we love to see these stories where a small business, and I think there was the florist lady, like with the flowers, she did something very nice. It sends such a big message, and they did a webinar, and that's how you build a brand. That's how you build a community, but like a real community. And it's really great that they do things like that. And I really believe everyone needs to look at freelancers and say, I mean, how can we go the extra mile for them? Because again, they, it's just, you don't know what's going to happen tomorrow. But it's really
the community, Shefi, the community aspect's so interesting in something like that because take a freelancer that's a photographer who's the bulk of their income, let's say, comes from wedding style events that they do. COVID comes, those things disappear. So here you have this company that is insuring them for those types of things, but they're a startup, and they're insuring a bunch of other freelancers. Like, there's more they can do, right, with connecting them to potentially other opportunities, or even as a tech startup, perhaps I don't want to say skill training, but maybe, hey, we can help you figure out other ways to generate revenue besides just doing weddings. There's a lot of creative things that you can do, and that's, to me, like, that gets to the heart of the community part. Is it becomes bigger than yourself. It becomes bigger than the company itself, and there's an authenticity to that is an intangible asset, and it buys you a lot of goodwill.
It's I want to add to that point. Like, if you brought an idea, you look at Thumbtack, which is a marketplace to hire freelancers, and they make a lot of money. So when someone like you says, okay, I'm getting married, I want to find photographers, then they send out your request to photographers in your area, and they buy the lead. They buy your information to be able to give you quotes. If insurance companies were smart, most of them are not, then someone like Hiscox would come and say to someone like Allstate, hey, listen, I have a bunch of freelancers. You have a bunch of policyholders. Let's kind of create a marketplace together where if people are getting married, we'd be more than happy to match them with people in our, customer base, and you don't charge for it. You make a good service for everybody. Why not? People appreciate that.
Yeah.
You can take on Thumbtack. You can probably do it better than them. And you'll need to see these things, and I think it's really good, especially now. You want to look at these initiatives, but yeah, that's a really good point.
And you have to remember that these, I think this was brought up by Next when they were talking about segments, but these companies, whether it's a freelancer or a small business or a micro business, we have a lot of the same risk when it comes to maybe media coverage, when it comes to legal, when it comes to advice that we need. So it's not just about lead and business opportunities. It's also about what can you go beyond in terms of the risk protection element to help with advice. And getting good insurance advice is actually harder to find, especially for freelancers, because the traditional agent doesn't think it's worth his time to spend giving advice. So
I'm a big fan. I think from a startup perspective, startups are so difficult and expensive, right? That I really like the community-based approach to that. It beyond just like find something that you love, but perhaps someone that's listening has been maybe toying around with the idea of wanting to do something. I really like the community-based approach where you start with the community, build the community, provide the inexpensive but common services to those communities, like advice and things like that, pointing people to the right idea and helping people, helping the community itself, give them a forum so they can ask questions and get answers. And then from there, finding affinity products and other things to kind of weave those into the community to really begin to enhance it. Something like that. I'm a fan of that because I think it's very inexpensive. It just takes effort and caring to be able to do that. So
yeah, once you build a good community, it's very hard to move you, but it's very difficult.
Yeah, don't screw it up. Any other news?
What else?
I saw that Kin did a fundraise, so I think we're given, and Lemonade did their first quarterly report. So given that our conversation with Hippo last week, Kin is another one. I put it in digital-based homeowner companies, focused predominantly in the Florida market, MGA model, but now has raised money and has formed a reciprocal type of insurance model. And once I saw that, I was just sort of like, Lemonade should have done that. It would have been a lot easier and more inexpensive for them to do that, and would have fit their model well. But we're starting to see like all of these different models and approaches. Kin going to Florida, Lemonade with their model, Hippo really focusing in on the homeowners and trying to bring in a lot of technological and other elements specific for the homeowner. We talked about Branch with bundling auto and homeowners. Lots of different models. I think they'll all survive. I think they'll all thrive. That's what's really interesting about this space.
I think about Kin, and apparently there's no correlation, especially in InsurTech, with funding and demand. But if you go look at their traffic numbers, there's not much to look at. So I wonder how they're selling. I wonder if it's kind of like they have a list of customers that they got somehow, and because they have licensed agents that get on the phone and call. So I wonder what's behind it. And it's an interesting topic because today, this week I listened to Lemonade's Q2 earnings call, and there was some interesting things there. And one of the interesting thing was when Daniel Schreiber said we pay for our customer acquisition upfront. We pay it once when we acquire the customer. That's it. We don't have to pay commissions and renewals and all that. So it's really interesting that you look at, there's always two sides to the coin. And then on the other hand, you look at companies that do rely on agents, and they'll know that every year when there's a renewal, they'll have to pay. But of course, you then go into retention rates, which apparently with agents, retention rates are better. So you have to consider that. But it really is like, if you ask me, like, what's my ultimate conclusion of this? And this is from my Army days. So in the Army, they tell you, the first thing they teach you is to respect time. You have to be on time no matter what. It doesn't matter if you have one shoe on your foot, or you have no shirt, or you didn't shave. You have to be on time, because once you're on time, then you'll have the opportunity to fix whatever it is that needs to be fixed. So move fast, spend a lot of money, doesn't matter, move fast. And I think that's what is good about Lemonade and Root. They move fast. Of course, they lose a lot of money, but they move fast. So I wonder what's the situation with Kin. Are they going to get to a point where they'll say, look how fast we move, look what we've accomplished? They need to get to that point. They shouldn't worry so much about losing money right now. But that to me is like the only interesting thing I would say, looking at Kin over the years, because they've changed models. They didn't start and they are where they are now exactly the same. So it's definitely an interesting company.
Any opinion, Shefi?
No, it's really what Avi says. There's not much to see right now, or not much that is out in the open for us to actually comment. I think companies that come to mind is Openly, although Openly has a different target segment, not necessarily just catastrophe-prone customers. They're targeting the high net worth, but InsurTechs competing with InsurTechs. Obviously, Hippo is in the space. Lemonade is in the space of home insurance, although not a focus, and now Kin. I think I was raising an eyebrow when one of the founders said that they found a way to eliminate agents' commission. And I think, well, that's like part of the story. The other part is you have to pay for customer acquisition somehow. So if you don't pay it to agents year over year, to Daniel Schreiber's and to Avi's point, who are you paying it to? You're paying it to Google, you're paying it on display ads, Facebook, etc. So a lot remains unknown.
And time, and don't forget the time.
Time
because
is money.
The time that it takes you to acquire a customer when you rely on agents is longer, and time is money, because you still have to pay the developer, you have to pay yourself a salary. So you have to look at the big picture.
Yes, I agree. So for those that are listening, reciprocal model is kind of a different form of the mutual model, where the policyholders actually own the company, own the insurance company. So there's a direct relationship. So the pitch for the reciprocal is that, hey, we're all in this together. And because you're in it and because you own the insurance company, you're much more likely to be more risk conscious, and it will attract those that have done mitigative, preventative type of additions to their properties, because they know they're lower risk, and so they want like a magnet. They want to attract other lower risk property owners, kind of pool their money together, knowing that our pool is a lower risk pool than other pools that you might find. And I think Kin is predominantly in Florida, so it makes a big deal. So I'm thinking likely from a reciprocal standpoint, the type of homeowners that they want to attract are those with fairly modern homes that are in the newer building codes, probably like IBHS fortified status. So there are elements of the structure that it's just like, it is built to withstand some pretty significant weather. And you get really good premium rates. It's a FM Global model. Everybody wants to be part of FM Global because they have the cheapest rates. Kin can sort of offer something similar to that, and I think Kin's message going forward will be, United States has a lot of catastrophic areas, and those will be areas that will be very difficult for a Hippo or a Lemonade to get into. You can't go in. You cannot go into catastrophic areas as the cheapest price. You will get your hat handed to you. So they're coming in from a different angle. But if they can make it in Florida, they can make it anywhere, right? If the Florida element works, it'll work all over the place. And I think the standard bearer for this is Pure. The Pure is a reciprocal, and they got bought out by Tokyo Marine for a really, really big price. So if you can do it right, those are very loyal customers, and so sure they might have to pay more to get them up front, but similar to what Daniel Schreiber said at Lemonade, we just got to get them once, then they're going to be loyal because they're going to be part owner of this thing. I kind of like that model a little bit. Yeah, I mean, CAC's a little bit more upfront, but not long term. Lifetime value, you should be able to stretch that out, and I think interests are aligned between the structure of the company and the policyholders. So, okay.
Yeah.
I would like to add one more thing, that one little tidbit that when I was digging in through Lemonade's quarterly report, was their 3-year reinsurance contract, which was an excess of loss reinsurance contract, got renewed and is now a quota share reinsurance contract. Very subtle, but I think very important. I think it gives more credence as well that they are very, 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 the capital light structure makes them very reliant on reinsurance. And I think that's a damper. I think that will limit their upper end growth. And again, this is not like me squashing on Lemonade. It's the valuation. The valuation just doesn't make any sense. They are very reliant on reinsurance to sort of make this happen. The proportional element means that they're sharing their entire business with reinsurers, and they can't survive without them. So as they get more and more into homeowners, to me, that's the KPI. I'll be looking at 2 KPIs from them: the dollar amount per customer that they're able to extract, and how much reinsurance. If they Pure went through every annual report with Pure, Ross Buckmuller talked about how much less premium over time they were paying to reinsurers. That's the sign of a successful company, when you can take on more risk. If you can't take on more risk, you're reliant on them. They control your destiny.
What I thought was interesting about Lemonade, and we've seen, and Seth talked about it as well, the increase in home sales over the past months with the pandemic. And they didn't mention that. And I mean, to me, I don't think they really try to market their home insurance product as much as they do the renters.
Yeah.
But that was interesting because a lot of, the new home buyers are kind of like new home buyers. They move on from renters, from urban places.
Yeah.
They went on to buy. So that to me is a sign that they're not really interested in that market, because they really want the products where they can automate as much as possible, and renters and pet is exactly that. But the valuation, we always know the valuation is ridiculous, not just in insurance, across any other industry. But it's kind of like an investor's game, and
Sure.
There's always the winners, and
Yeah.
the question is, will it stay? Won't? I mean, it's hard to predict these things.
So
The most we can do is benchmark, which is what we're doing right now, benchmarking a certain model against something similar. It's not always apples to apples, but if you can take something positive from Pure model, or you can take something positive about the reciprocal exchange, or obviously from you take what you like from the acquisition game of fintech, you take what you like from the acquisition game of legal tech, or entering giving usability in a product that's not meant to use, right? And then you try to make something that's better, more sustainable, more relevant to the times, right?
And Hiscox had actually a nice partnership this week, the first in the UK. That's what they said. They've partnered with an accounting software that's owned by NatWest. They were acquired in 2018 for 50-something million. So, in the software, they kind of figure out your financial data, your individual requirements, and they present you with a quote, which in the small business space, I say watch out, because consumers are not as willing to compare, because it's not like auto insurance where, let's see, 20 options. Business insurance, you could be lucky to have one quote and one company willing to, we would have paid a lot of money to get our media coverage. But we ended up finding a nice company. So, but yeah, so that was an interesting move. And what Shefi said, like, look at fintech, look at that, look at the acquisition. The future is integrated. Unless you're a lone ranger, then it's not. But
again, so people say always, one of the things that I disagree with is people say start with the customer, and I think it doesn't work in insurance. And I know not many people share my opinion, but the reason my stance is start with the product is there's just different dynamics. And if this is a product that people tend to shop, and Progressive mentioned this in their earnings call, people are shopping more and more. But the question is, are there options? So even with Hiscox, Next Insurance, soon to be maybe Pi in the work comp space, hard to compare, hard to see that apples to apples. So if you offer a product that in their mind is fair, they're not going to go to aggregator.com and look for a quote. So understand the product that you're starting with, and then you can figure out distribution. When you figure out distribution, like PolicyGenius did, they figured out distribution, they can build on that. If you don't have distribution, then you can't really take your time to focus on other things. And I think it's really important to make sure that the priority, you have the right priorities in place, right?
And that's, I think, what Haven Life did. They have distribution figured out, and they're working on products. They're launching different products to help them differentiate. And then that's the thing, like when you have distribution, you worry about the product. When that's where it is. But when you don't have distribution, you could try to make it through the product, but it becomes very challenging.
I think product development in insurance is really interesting. We should at the right moment, I think when the right news article comes up, we should probably spend some more time, because it's a delicate balancing act, right, Shefi? Like, I agree with you. I'm not sure you start with the customer. And I don't know if there's another industry where you would think that way. Because what does the customer want?
You know what? Isn't that great? We had a conversation, I think it was last week, me and Avi and another insurtech, a super well-funded insurtech, the unicorn status of insurtech. And he was mentioning how this is a really expensive subscription product and the customer doesn't want to hear from us. And Avi and I said, God bless them. Let's move on. You don't have to change. There are not a lot of positives working in the insurance industry. Take what you can get and work on the challenge. Don't create a challenge if there isn't one.
As a product developer myself, I feel like I'm on a tightrope, right? I spend a lot of time bouncing back and forth between, hey, would the customer like this? And then what are the implications of that? And I'm bouncing because I can't always give the customer what they want, because what the customer wants is they don't want to buy my thing to begin with. But if a claim happens, they want me to pay the full amount. So how do I give them value in that sort of transaction? That is really delicate balancing that you have to do to try to manage that. And so I think about it all the time, probably much more than what's healthy to do that. So we should do a whole series, I think, on that, because I don't think people understand that you can't start with the customer first, because they don't want what you have to sell. You have to kind of nail down certain things and kind of build off of it, and be very careful how you touch them.
I agree.
So,
amen.
Yeah, that's a good takeaway.
Friday, August 14th, as is usual, we're always a little bit unsure about whether we have like a full show, but I think we could always talk for 2 hours, no matter the week. So, as usual, Shefi, Avi, awesome conversation. Thank you.
Thanks, Nick. Bye,
Thank you.
everybody.
Bye, everyone.
Bye.
Have a great weekend.
Bye.